All right. Welcome back to the Know Your Numbers REI podcast. This is your host, Chris McCormack, CPA, certified tax planner, founder of Better Books Accounting, where it is our goal to help you pay less money to the U.S. government. Today, we're going to be talking about the importance of documentation. We know that this is a piece of the accounting and tax puzzle that is nothing short of important. It is almost required. I would say that it is required. If you don't have this piece, your greatest tax strategy will fail. If you come on as a Better Books client, we will say the best way that you can protect yourself against the audit of the IRS is through the power of documentation. And we know that it is one of the top questions for real estate investors and business owners. We know that documentation is one of the first things that you consider when you start your business, and it seems that it never goes away. What do you need to document? Do you need to document anything? How should you be documenting? Why do you need to document things? And today we're going to be covering a gist of it. Please know that this isn't all encompassing. We will try to cover the key parts and pieces, but eventually it's up to you to find the right team and make sure that you're getting the right advice. We know that there are far too many investors out there, business owners out there that are doing this life of tax strategy and tax planning and tax preparation, trying to find the cheapest way to do it, when in reality, the cheapest way is the most costly way, right? If you're taking investment advice or tax advice from Instagram influencer A or YouTube sensation B or LinkedIn post D, like this is a quick way to find yourself in deep waters, we'll call it. And when you do that, you take all these strategies from various social media sources or even this podcast. You might hear of something that strikes a chord and sounds really good, but you don't want to take the next step of reaching out to us or any of the other highly qualified real estate tax strategists out there, and instead you take it upon yourself to do it. And then come tax time, you can just go on TurboTax or H&R Block and save all the money and do the thing. And then you think you're in the clear, but that's not the case, because you might have taken a piece of the strategy, but you didn't get the whole pie. And without the whole pie, you're going to be in deep trouble if the IRS comes looking to audit you and they have suspicions around what you're deducting. And so today we're going to be covering the topic of documentation and the importance of documentation, how you can use it to protect yourself. But again, it is on you, the taxpayer, to find the right team to make sure that you are actually protecting yourself. We do not sign off on anyone's tax returns or give them any sort of qualified advice unless they are a client who is paying and engaged in a form of service with us. We are a highly regulated industry, and we do our best to equip you, the taxpayer, to have knowledge. But at the end of the day, you need to have the right team in place, because telling the IRS or any federal government that you just took what was on Instagram or Spotify or YouTube and you did it, that's not going to fly. They're not going to say that's acceptable. And so today we're going to help you get yourself into a more acceptable position. But at the end of the day, teaming up with the right team is the best and highest use that you can have when it comes to saving on taxes. So documentation. What is documentation? Why do you need to document it? Documentation is the lifeblood to every tax strategy. Whether you're keeping receipts or logging hours, logging miles, verifying contracts, whatever strategy that you're working on, you need documentation. And there are failed court cases after failed court cases of taxpayers not documenting. I've covered one in recent episode about paying your children, right? It's a very popular strategy. It's one of the more common ones. We've talked about it. It's a great strategy. I'm all for paying your kids, but I want you to do it in the right way. And if you don't have the right documentation, which comes in the form of contracts, tracking hours, having a set pay, and being able to verify that work was actually done, to name a few, well, you're gonna lose out on all of those tax savings that you could have had if you documented properly. There was a recent court case of someone who paid over $16,000 to her children spread across 2 or 3 businesses, and she knew that you could hire your kids. And so she did that. She didn't have any contracts, didn't have any set wage amounts, didn't have any set job expectations, and didn't withhold any taxes, didn't file any W-2s. And the IRS came, saw that she was doing this, and they said, hey, the $16,000 that you writ off, we're going to need that to be classified as income. You owe taxes on that. You owe interest. You owe penalties. She took them to court and lost the court case because of all of those reasons that I mentioned. She didn't have the right documentation. So when you go to hire your kids, you're going to need documentation. You're going to need a clear outline of job expectations. I worked for my dad for a while. He's a business owner in Connecticut. And we, as high school students, and even in my college years, if we came home for a break of some sort, we would often help him out around his office. And we were doing serious work. We were doing actual jobs. We were paid a certain amount for those jobs. I have to believe that we signed a contract. He withheld taxes from those paychecks. And through all that, it's a verified tax strategy. He did it by the book and what the book requires. But if you're just giving your child $4,000 out of the business bank account and saying, yeah, file some papers and maybe mow the lawn and do this thing and then we'll be good. No, that's not going to fly. It needs to be reasonable and ordinary and necessary. And these are the things that the IRS will look for when they come to verify any expenses, whether that's hiring your kids or taking meals or traveling or buying stuff on Amazon. They want to make sure that it is ordinary and necessary. And without those two things, you can throw it all out. So be sure that you have documentation. Documentation when it comes to hiring your kids, documentation when it comes to meals, right? Meals are 50% deductible. So just because they're 50% deductible doesn't mean that you can go out and buy every meal on the business card. They're a very highly regulated deduction. If I, at the IRS, am reviewing some tax returns and I see that you spent $50,000 on meals throughout the year, well, that's going to raise a red flag. I come and see that all of your grocery bills are written off. No, that's not going to fly. I see that you ate out every single day, breakfast, lunch, and dinner, and you wrote all of it off as a business meal. No, it's not going to fly. If I come and see that you have $10,000 worth of business meals and I knock on your door and I see that you have receipts for all of those meals and explanations of who the meal was with and what it was for, that's verified. That's reasonable and ordinary and necessary. So documentation is key. Bookkeeping documentation. If you buy something on Amazon for $200, well, who's to say that that's not a personal expense? You want to keep that receipt. You want to have an explanation for what it was for and why you're using it in the business. Because I can go and buy something on Amazon for $200 and use it for personal reasons, right? My wife and I are expecting a kid. We can go and buy a crib on Amazon. And if I use it on the business card and don't have an ordinary and necessary reason for using the business card, well, that's going to be taken off. And I'm going to owe taxes and interest and penalties. And I'm going to be in hot water because I'm a CPA and need to be doing things by the law. So please know that documentation is key when it comes to hiring your kid, when it comes to writing off meals, when it comes to tracking mileage, right? There's another one. You go on Instagram or YouTube and you hear about bonus depreciation and how you can write off your car in the use of your business. And it's great. I've done this for a lot of our clients. One of our clients was able to save upwards of $6,000, $7,000, $8,000, $9,000 in taxes by writing off his car, but it was because we had the right documentation. We worked with him on, hey, this is what you need to do. This is how often you need to use it. You shouldn't use it for these things. Track this, don't track that. And by having the right documentation when it comes to vehicle expenses, you can defend yourself properly. If you don't have the right documentation, well, you're in some doo-doo, I'll say, for lack of a better word, right? Like if I just went and wrote off my entire car because I wanted to, but I didn't use it at all for business, or I didn't track any mileage, well, the IRS will not take that as acceptable. So tracking mileage, having a clear business use, ordinary and necessary. That's section 162 of the internal code, is that every business expense has to be ordinary and necessary. If it meets that criteria, there's a good chance it can be deductible. But who gets to define ordinary and necessary? You, it's having the right team. And then ultimately the IRS gets to say, if they come and see you writing off certain things and it's hard to explain, they're probably going to take it away and you're going to owe some taxes on it. Receipts are a big one. People are like, what receipts do I need to keep? Or, hey, I kept all my receipts. Here's my shoebox full of receipts. Don't come to us with that. I'll say that much. But keeping receipts is important, but keeping it in a way that makes sense, right? Use software, people. QuickBooks is a great resource to have, and you can upload the receipt directly to QuickBooks and gain access. Using your bank statement is not a form of documentation. The IRS will not accept it. There's a good chance that all you have for documentation is your bank statement. You're going to be owing a lot more money. They're going to see your income and they're going to take away your expenses and you're going to be in trouble. So please, people, know what to document. If you're traveling, make sure you're keeping track of where you went, why you went there, the business purpose behind it, meals, who you ate with, the business purpose behind it, hiring your kids, contracts, management fees, okay? A lot of you have these crazy setups for entity structures, which I won't get into those here. We've done episodes on entity structures, but you're not using them properly. You're just transferring money from operation A to operation B, and you're taking the tax deduction and forgetting to include it in income here. No, you need contract. If you have a management company and a company or your property is paying management fees to this company, you need a contract saying this is how much the company pays management company A. There was a recent court case The company was making 20 some odd million dollars, and they lost the court case, although they were paying management fees to their owners' companies. So imagine management company A, owner B, and owner C manage this company. So company A pays owner B and owner C a certain amount every year. The overall company A was paying or categorizing it as a management fee. But the IRS came in and looked at it, and they realized that the company was just writing off a certain amount based on profitability at the end of the year. So they were labeling it a management company, and they were paying it from one company to another. But because of the way that they had set it up and the failed documentation, they had no documentation saying this is how much money they pay each company. This is the way that they pay them out. This is the regularity of it. Because they didn't have any of that, the IRS threw it all away, and the company A had to owe the amount of deductions in taxes. These are real events. And if you're not careful, and if you just take something that somebody gave you and don't meet with an advisor on a regular basis, well, you're going to miss a lot. You're going to open yourself up to an increased risk of losing an audit, and that's not something you want. So when it comes to documentation, the more the better. But please don't show up to me or your accountant's office with a shoebox full of receipts at the end of the year. That's not how it goes. And don't do it with bank statements either. You need clear documentation. And this is why it's so important to work with a qualified tax professional, because great documentation will save you from a lot of headaches in the pathway of the IRS. Poor documentation will give you, your accountant, and the IRS a lot more headaches than you ever thought possible. This is the Know Your Numbers REI podcast. We have covered documentation and the importance of documentation when it comes to tax strategy. If you got any sort of value out of this, give us a 5-star rating and review. If you're watching us on YouTube, go ahead and click that subscribe button. That really helps us get in the eyes and ears of listeners just like you. We know there's a lot of real estate investors out there who are going at it alone, and they don't need to be. It is a lot more costly than just investing in the right professional advice. So be sure to share it with a friend. If you have questions, go ahead and leave us comments on YouTube. If you'd like to have more regular access to us, join our Facebook group. We post daily in there about tax strategies, and it's a great opportunity for you to network. We have over 1,000 people in our Facebook group and growing, and we'd love to have you join us. Until next time, God bless you and keep moving forward.